As Ricky Bobby once said, if you ain't first, you're last. And with that mindset, have you ever wondered who the best dividend paying stock in the technology sector is? Well, if so, then look no further, where today we're going to give the crown to one of these two well known tech stocks that made it all the way through the bracket. The winner is going to be the stock with the most points out of 10 possible points and revealed at the end of the episode. But now let's take a quick look at the episode criteria and remember to hit that like button to help out the video. So the first competitor today is Broadcom, stock ticker AVGO. Broadcom is a company within the semiconductors sub-industry, within the semiconductors and semiconductor equipment industry of the information technology sector. Founded in 2018, AVGO designs, develops, and supplies various semiconductor devices with a focus on complex digital and mixed signal complementary metal oxide semiconductor based devices and analog 3.5 based products worldwide. And the company operates in two segments. First segment is semiconductor solutions, and the second segment is infrastructure software. And their competition for today's tech crown is Apple, stock ticker AAPL. So Apple is a company within the technology hardware, storage, and peripherals sub-industry and industry of the information technology sector. Founded in 1977, Apple designs, manufactures, and markets smartphones, personal computers, tablets, wearables, and accessories worldwide. Additionally, the company offers various services such as Apple Arcade, Apple Music, Apple News Plus, Apple TV Plus, Apple Card, and Apple Pay. Now, the next thing we're going to do is shuffle the companies up, and we're going to take a look at the market cap of these two tech giants. So you guys can see here that Company A has a market cap of $250 trillion, while Company B has a market cap of $201.55 billion. And there's the chart on your screen to show that $201 billion has never looked so small. All right, now going into the first category where we're actually awarding points to one of these two companies, we have growth. You guys can see here that Company A has a revenue year over year growth rate of 11.63%, comparing that to Company B having a revenue year over year growth rate of 17.38%. And then we go to the revenue 3-year CAGR, where Company A has a 14.37% and Company B has an 11.2%, bringing your score after the growth section of 1 point for Company A and 1 point for Company B. The next category we look at is profitability and specifically the gross profit margin. You guys can see here that Company A has a gross profit margin of 43.31%, while Company B has a gross profit margin of 74.89%, bringing your score of 1 point for Company A and 2 points for Company B after the profitability section. The next category we have is momentum. And here we're looking specifically for the percentage off of the 52-week high. My mindset is the higher the percentage off of the 52-week high, the bigger the discount for a quality company. So you guys can see here that Company A had a 52-week high of $182.94 with a current price of $155.81, bringing them 15% off of their all-time high, where Company B had a 52-week high of $677.76, a current price of $500.22, which brings them 26% off of their all-time high, which brings your score after the momentum section of 1 point for Company A and 3 points for Company B. The next category is the reason we are all here. It's the dividends. You guys can see here that Company A has a forward dividend yield of 0.59%, while Company B has a forward dividend yield of 3.33%. Company A has a forward annual payout of 92 cents. That's compared to Company B's $16.40. The payout ratio for Company A is 14.69%. That's compared to the 49.33% from Company B. The 1-year dividend growth rate for Company A is 7.12%. That's compared to the 1-year dividend growth rate for Company B, which is 11.61%. The 5-year dividend growth rate for Company B is 9.18%. That's compared to the 42.68% 5-year dividend growth rate for Company B. And Company A did not qualify for a 10-year dividend growth rate, but Company B did, and their 10-year dividend growth rate is 43.59%. And before we get to the final results and the grand reveal, make sure you guys are remembering to hit that like button to help out the channel. And don't forget to subscribe and ring the bell down below. You guys will get notified every Monday and Friday when I post new dividend-related content. And lastly, check out that comment section down below. Let me know who your favorite tech stock is and why. But now let's see who gets that tech crown. And the winner is Company B with a score of 8 points to 2. And the moment you guys have all been waiting for, Company B is actually Broadcom, stock ticker AVGO. And looking at the graphic you guys can see on your screen, both of these companies have actually significantly outperformed the S&P 500 over the last 10 years by a pretty wide margin. Again, and always remember that this information is subject to not only the metrics I chose to use, but the date and time I completed my research, which was closed market on September 2nd. But with that being said, AVGO, also known as Broadcom, has proven to be the best dividend paying stock in the technology sector. If you're a little underweight in the technology sector and looking for a place to start your own research, one or both of these companies might be a great place to start. If you guys are now curious to know which dividend paying stocks are the best in the other sectors that I've covered, make sure you guys are checking out this playlist. But until next time, see you.